Welcome to the Economy Magazine. I'm Benjamin Chung Alfares with the top reports from the world economy. Coming up, how are Israeli startups affected by the war? And why don't investors leave Israel despite the war? First, the headlines. The US and European Union greatly expanded economic sanctions against Russia in their strongest action against Moscow since the Cold War. While the conflict between Kiev and pro-Russian separatists has remained confined to eastern Ukraine, it could have global repercussions. The International Monetary Fund, in a report released on Tuesday, said the recent escalation in tensions would raise the risks for banks exposed to those countries. Bank of America cut its exposure to Russia by 40% to $3.94 billion since the end of December. And other Western companies, bracing for the sanctions' impact, are taking similar measures. Argentina's top government officials and holdout creditors continue negotiations on Wednesday after failing to come to an agreement in a historic meeting late on Tuesday. Argentina faces a deadline of July 30th for either working out a deal with the holdouts, pay them in full, or allow a default. Members of Argentina's banking association, known as ADEBA, are working on a last-minute plan to help the country avoid default. Mercosur countries in a summit in Caracas fully backed Argentina's government in its dispute with hedge fund creditors.
I believe those trying to agitate the default scenario make no sense. Default means when someone doesn't pay, and Argentina has paid. They also try from outside and inside of Argentina to scare us into believing that if we don't do as we're told, will bring upon our nation the 10 plagues of Egypt. Well, you see, we have already lived through the 10 plagues of Egypt precisely when another government did it as it was told from foreign countries.
Germany's benchmark government borrowing costs dropped to their lowest level on the record as the central bank has kept interest rates low to boost Europe's economic recovery. The yield on Germany's 10-year bonds dropped 2.6 basis points to 1.12%, the lowest borrowing rate since the early 1800s. Low interest rates across Europe have pushed government bond yields down to historic levels. French, Spanish, Italian, and Dutch government borrowing costs are now at rates not seen for hundreds of years. Various events are pushing down yields, including weak construction data, the rise in global instability, and new sanctions against Russia. But the main driver of low yields remains the European Central Bank's efforts to counter deflation by cutting a key interest rate below zero. Asian stocks rose for a fourth day, with the regional benchmark index extending a 6-year high ahead of the Federal Reserve's decision on monetary policy on Wednesday. The MSCI Asia Pacific Index climbed 0.3% to 149.88, with 7 of its 10 industry groups rising. The index rose 2.6% this month through Tuesday, when it closed at the highest level since June 2008. As Chinese manufacturing, added to signs Asia's biggest economy, is stabilizing. South Korea's Kospi Index advanced 1%, extending gains to close at the highest since August 2011, and Hong Kong's Hang Seng Index rose 0.4%. Since the conflict in Gaza began, Israeli startups have had to be even more resourceful. With very young teams, Israeli startups are especially challenged by the massive use of IDF reservists. Here's a story from Fleur Sitruk.
The startup Shop and Flight has not even celebrated its first 2 years, but already hopes to play in the big leagues. The company, which offers travelers a price comparison of products in more than 80 airports in the world, is in the full development phase. But since the beginning of the conflict, 2 of its 6 employees cannot come to work.
One of them is a fighter, and he needs to go and to reserve our country. He got it Tafshmoni, what's called. And the other one, she's living in Ashdod, and it's very hard right now to come from Ashdod. It's a long ride to come to Tel Aviv, and with all the alarms, and especially for a lady, it's not easy. So we are trying to do our best with working a long distance. So we are doing our best and working more hours, 3-4 a.m. every night.
The Israeli startups here today are just as focused on the news as anyone. The ground offensive that has already lasted more than 3 weeks in Gaza has a big impact on the Israeli economy. The Time, an investment fund that specializes in digital, is hosting at least 15 startups.
The economics in Israel is stopped, or there is a big decrease in the activity in the local market. But most of our startups and other startups are facing international markets. So you see less impact on that. However, there are other type of impact that you do see. For example, reserves. Hopefully it will not last for a very long time, because at the end of the day, if a CTO is out of work for 4 or 5 months, there is an impact. The good thing about startups is that most people know everything about the startup.
Beyond the purely economic consequences, the conflict plays on morale. Every day, Ido makes the round trip from Tel Aviv to Ashkelon, a city in southern Israel which has been covered by hundreds of rockets since the conflict began.
We have 30 seconds to find refuge on the stairs when there's an alert. Explosions constantly happen. We hear sirens from rockets. It's not easy. Here's the entertainment team responsible for ensuring my morale. I try to disconnect completely in order to work.
We get a notification for all the alarms, so we know what's going on, and you can see.
Thanks to their flexibility, Israeli startups are able to maintain their performance in a highly competitive market. However, they still do fear that the conflict, if it were to endure, permanently would damage the image of Israel's startup scene abroad and also discourage some investors.
Investors typically tend to reduce their holdings when confronted with geopolitical conflict, but Israel may be an exception to the idea that conflict scares off stock investors.
It's still too early to tell the economic effects of the security situation on the Israeli economy. Judging from security events of similar magnitude in the past decade, Operation Protective Edge will likely only have a moderate macroeconomic impact. The Second Lebanon War of 2006, for example, shaved about 0.5% off GDP. The Bank of Israel on Monday lowered lending rates by 25 basis points to 0.5% to help lift inflation and curb the robust Israeli currency, which, despite the ongoing conflict, continues to strengthen against the dollar and the euro. And like the shekel, the Israeli market has also been on the rise since the onset of Operation Protective Edge. Since July 8, the day after the IDF's airstrikes began, the Tel Aviv 100 rose 2.3%. In fact, the index is up nearly 13% over the last 12 months. The resilience of the Israeli market in the face of war is nothing new. During Operation Cast Lead, which took place between December 27, 2008 and January 18, 2009, at the height of the global recession, the Israeli market climbed 7.9%. Now, much of the positive sentiment stems from the fact that both domestic and foreign investors are well informed and have seen the market recover in the past. Another important factor is that a number of Israel-based companies are globally focused, listed in the U.S. and Europe, and generate much of their income from abroad. Generic drug giant Jaffa Pharmaceutical Industries, Israel's largest company, brings in 95% of its revenue from outside of Israel. Despite the resilience of the Israeli market, the negative impact on some industries, especially the tourism industry, is likely to last longer.
We're joined now by Clarity Capital co-president Lawrence Schreiber from the investment firm's New York office. Mr. Schreiber, thanks for joining us.
Thank you, Benjamin.
So what exactly is the impact of the current Gaza hostilities on the world market?
Well, that's a very interesting question. As we look at the global media, it's clear that the Gaza situation, the fighting between Hamas and Israel, has really taken over all current news events. We're seeing it in every headline around the world, both in print and in online media.
Right.
Interestingly, the financial markets have taken a completely different perspective. It really, as we look at the impact that it's had, has really been almost a minimal impact, if any. We've seen the U.S. markets, equity markets, are staying within about 1 or 2% of their all-time highs over the last week or two.
Right.
When we look at European markets, they're within 1 or 2% of their highs over the last 5 years, although they haven't actually gotten back to their pre-2008 crisis levels. Gold, which tends to be a very strong barometer, indicating anxiety and fear in markets.
Right, like flee to gold.
Flight to a quality asset of some kind. We saw gold prices actually spike right around the beginning of the conflict, but I think that was because it happened to coincide with the shooting down of the Malaysian jetliner over Ukraine by Russian separatists. And I think there was much more of a fear of a Russian reaction and what would happen with Russia and other countries at the time, rather than what was going on in Gaza. And we've seen gold prices actually come back down since that happened.
Wow. Okay. Is there a specific Wall Street perspective on this?
Well, it's interesting. I think that what financial advisors, people who are active in the financial markets, tend to take a much more rational view than the kind of day-to-day news and the day-to-day emotional response that we get to what happens at a human level.
Yeah.
So as you mentioned, I'm co-president of a global financial services firm.
Sure.
Our job is to actually look through all the noise and find the facts that are relevant for our clients. And what we're seeing by the difference between the way the financial markets are reacting and the way that the general media is reacting seems to be the difference between trying to see the facts of what could have a global impact and dealing with the more detailed human story.
Right. Why exactly is the impact so limited? I mean, if you were to compare the Israel-Gaza story to, say, the Ukraine-Russia story, like what are the main differences from the financial perspective?
Right. Well, so I think, again, as I said, it's important to look at the facts. So as you know, when that first rocket landed about a mile away from Ben Gurion Airport, the U.S. FAA made a decision to temporarily shut down flights from the U.S. to Israel. The CAA in Israel, the Civil Aviation Authority, actually provided some good statistics to the FAA in response to that. And some of the numbers are very remarkable. And I think it's kind of the way that financial markets look at things. They calculated that the probability of an aircraft sitting on the tarmac at Ben Gurion being hit by a rocket was 1 in 100 million. And the probability of an aircraft in the air, either arriving to Ben Gurion or leaving Ben Gurion, was approximately 1 in a billion.
Okay.
So when the FAA saw those types of numbers, they realized that there are many other impacts on commercial transport that are much more significant than that.
But let's relate it directly now to Ukraine and Russia. Why is that so different?
Well, I think that Russia being a global trade counterpart for so many people and having such a direct impact on oil supply around the world, in addition to having their own significant military and trade relationships around the world, has the potential to draw in a China or a U.S. in a much more significant way than likely the situation in Gaza would ever. I mean,
certainly the economy, obviously, in the Ukraine is much more connected, so to speak, to the rest of the world than Gaza is at this point.
Right. Ukraine is actually a very, very small piece of the Russian economy, but pulling Russia into a conflict that potentially will put it at odds with other global superpowers could certainly have a much bigger impact.
Okay, and well, relative to Israel then, I mean, like pulling Israel also is certainly connected to, worldwide to different markets. Why doesn't that have the same effect?
Well, I think it comes back to the idea of looking at what's rational versus what's emotional. And interestingly, the Pew Research Foundation in the U.S. just issued a study that showed, at least for U.S. people, there's a very, very high correlation between the level of education that individuals have and their knowledge of current events connected to their support for Israel. So people who have more years of education, either at the high school or university level, tend to be more supportive of the state of Israel, and people who are either less educated or less knowledgeable tend to have less support overall. So again, I think it's the same idea. Once you know the facts, you tend to respond in a more rational way. And I think that's what we're seeing in financial markets. We're a firm that's based both in New York and in Israel. And we see the strength of Israel. We don't see this conflict as something that will be long-lasting or have a significant impact.
What would have to happen in Gaza for it to have an impact? Or is that a fair question to you?
It's a very great question, I think. I think it's important to put things in perspective. When we look at what's going on in Gaza, even if it were to escalate from here somewhat, it just pales in comparison to what's happening between the ongoing civil war in Syria, the emerging crisis of ISIS moving through parts of the Middle East, even the ongoing threat of potentially a nuclear Iran. And as you said, Russia becoming more at odds with its counterparts because of the Ukraine. All of those things are so much larger than anything that could really come out of Gaza in terms of a global perspective, not an individual human perspective, but a global view, that it's just hard to imagine a scenario where Israel is really a threat, or it really has a significant impact. We see this as a temporary situation, and it will get resolved.
Right. Okay. Well, I mean, in looking at different geopolitical conflicts and other financial shocks that have happened over the past, say, 70, 80 years, different studies have shown that even though there's an initial impact, over time, the impact tends to lessen, and the financial markets tend to just sort of, get back on their feet, so to speak. Isn't the Israeli case just another example?
I think it is. As I said, we don't even see much of a downtrend in process, but certainly to whatever extent there was, we think it'll be a temporary blip, and things will continue, and we'll get back to normal.
Okay, well, Lawrence Schreiber, co-president of Clarity Capital, thanks for joining us. Thanks for giving us more insight into the situation here with Israel and Gaza as relates to the global financial markets. And we hope to have you here again.
It'll be my pleasure, Benjamin. Anytime.
Thank you.
Thank you.
Well, that takes us to the end of this very magazine today. Thank you for joining us. Thanks for watching. Join us on Twitter, watch us online, and send us your feedback, please. Thank you.